Guys, how are you guys doing? I'm really excited about this new series and video where I will be going over what I think are the best growth stocks for the month. I hope you guys really enjoyed the video, and if you guys do, a like and subscription would be much appreciated because it actually did take a really long time to make this because I had to research and make sure that all the information and numbers aligned. But before I start, I want to mention that a couple of these companies and their growth have been affected by the ongoing tariffs and trade war between the US and China, and with recent news that a deal is in proximity, it shows good signs for these companies. But anyways, I'm gonna go ahead straight into the list because I don't want this video to be too long. So in no particular order, I present to you guys the first stock. So the first stock is CAT, also known as Caterpillar, which is a company based in the United States that designs, develops, and manufactures machinery, specifically construction machinery. It is currently the world's largest equipment manufacturer with a operating income of 4.4 billion and a market cap of 75 billion. Last year, it beat earning expectations on 3 out of the 4 quarters, but it missed by a significant amount on the fourth quarter. But here comes the explanation on why. The trade war between US and China started on July 6. However, the tensions did not grow much until late September, and that is when CAT began to drop. Reason being is that in one of the many tariffs that were being imposed was a 25% steel and aluminum tariff. Being a company that uses a lot of steel and aluminum to build your product, you might expect some financial inconvenience as the commodity that you run your business on increases in price. That being said, Caterpillar had a rough fourth quarter, but is looking to potentially bounce back as a trade deal approaches. Being down nearly 10% since the trade war started, it shows a lot of upside potential as a deal closes in. CAT has also been trending upwards for the last couple of months, and it has just recently crossed the 200-day moving average, and it just shows a nice bullish uptrending pattern. Ford has a very similar story to CAT. Ford is an American automobile company that not only is a great dividend investment with a 7.1 dividend yield, but also a good company in general. Coming in with a 35 billion market cap, Ford uses steel and aluminum in its car production, and in a statement released by the press, they said that the tariffs could result in an increase in domestic commodity prices. Ford has dropped just over 30% from the start of the trade war, so it is quite clear that the rise in aluminum and steel did take a toll on the company. However, with a deal in proximity, it could mean a stabilization in aluminum and steel prices, giving Ford a leeway to better profits. Ford is also showing a nice ascending triangle pattern, and it's approaching its 200-day moving average, so it's quite bullish at the moment. Also known as Coca-Cola, is considered a very stable company by most. It has recently dropped 8% from its 52-week highs after they issued a disappointing growth forecast of 4% for 2019 due to economic slowdown. KO also happens to be a victim of the China tariffs as they pack their soda in aluminum cans, so a combination of political uncertainty and a slower than expected growth outlook has poised KO into a good buying opportunity as tensions seem to be ending. KO has also found a strong support at the $44.50 area, and it's also looking to build upon that support and approach the 200-day moving average. So the next stock is EA, or Electronic Arts. If you guys have been on social media, I'm sure that you are aware of or have at least heard of the game Fortnite. It has been dominating the video game industry for the last couple of months. However, that is not why EA is a good buy. In fact, EA didn't even publish Fortnite. It did, however, go on and publish a game called Apex Legends, which is a new free-to-play battle royale game that was released on February 4th of this year. Apex Legends has been making some noise in the gaming community as it has had over 2.5 million players on the release date, which continued to grow to over 25 million by the end of the week. In comparison, it took Fortnite almost twice as long to hit those same numbers. And being a relatively new game, I believe that Apex Legends has still a long way to go, and by the looks of it, it could end up taking the spotlight away from Fortnite, which will bring in some good profits for its publisher EA. EA is also forming a nice bullish cup and handle pattern on the monthly charts, and it's also approaching the 200-day moving average. Stock is Apple, which is down nearly 30% from its 52-week highs. This is caused by the projected cut of iPhone sales for the fourth quarter. In a letter to investors, Tim Cook blamed the miss of revenue on the slowing Chinese economy and trade tensions between the US and China. However, Apple did try to combat the lower sales by offering a higher trade-in value incentive when you purchased a new iPhone. This, along with the ease of trade war, should combine for a better Q1 for 2019. Apple is also approaching the 200-day moving average and is currently trending up, implying that the adjustment to sales strategies has been taken as appropriate by investors. Apple also looks to have bottomed out and is continuing its upwards momentum. So that concludes the list of top 5 stocks for the month of March. I hope you guys enjoyed the video because it really did take a while to put in all the research. If you guys did, a like and subscription is much appreciated. So that's all for this video. Thank you guys for watching, and I will see you guys in the weekly stock market recap.